Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. Today we're talking about industrial real estate. My guest is Ryan Severino, Senior Economist with REIS. And Ryan, I'd like to ask you about the investment sales market. And are industrial properties, is that a favored sector with institutional investors today?
I would say absolutely. I think whereas institutional maybe used to fly under the radar and the old mantra was that they're small and it's difficult to cobble together any meaningful scale with them, I think the pendulum is swinging in favor of industrial, not just because the fundamentals, as we talked about, have been improving over the last few years, but I think a lot of investors, because of the difficulty in cobbling together scale, or at least they tend to be underallocated to industrial. And I think with its fortunes improving, I would say investors are increasingly training their sights on industrial, looking for size when they can get it. But even on a smaller scale, they can be selective about doing really good deals. I think the investor community is certainly waking up to the wonder that is industrial these days.
Yeah, it does seem like a safe sector, doesn't it? I mean, you have long-term leases, you have high credit companies, and then you have the growth of online sales, right?
Right. I mean, there's no real, there isn't a real risk. If anything, the kind of creative disruption from technology commerce is benefiting the sector these days. And I think you're right. I think you do tend to see longer-term leases. You don't see as much volatility as you do in, say, the office sector or certainly in the hotel sector. And so I think if you write quality credit in place with long enough leases, and it becomes almost bond-like in some respect. Now, obviously, there's more risk than owning a bond, but if you do your homework correctly and you have really good asset managers, you can almost turn it into a bond-like investment. And I think that's what a lot of investors see potential in.
And what's that kind of demand doing to sales volume and cap rates today?
You know, sales volume and cap rates are both looking really healthy. I think, especially given what we saw fourth quarter into first quarter with some of the really big portfolio deals that were announced and that went off, you know, Incor and KTR, where you're talking about billions of dollars. You're starting to see, serious pressure on pricing now. You're starting to see pressure on the cap rate side. You know, probably average cap rate these days, you know, somewhere around 7% or so, and probably trending downward over the next few years as investor interest in the sector heats up. So I would say the wave of capital that we are seeing enter the sector, especially the wave of foreign capital, which we've never really seen, at least on this scale in the industrial sector, is really starting to not only change the dynamics of the market, but it's certainly having an impact on pricing right now.
And how much are foreign investors increasing their appetite for U.S. industrial properties? And where are they coming from mainly?
It's huge. We could be looking at potentially this year somewhere in the neighborhood of maybe 50 to 70 billion dollars, which is an astounding amount of money that's coming into the sector, and it's coming from different corners of the globe. But I'd say, especially in Asia, we've seen a really serious uptick in interest. Not just obviously, the government of Singapore clearly put a lot of money to work. But even some of the people I've been talking to about, and I know we've discussed this before, the wall of Chinese money that is now coming flooding into commercial real estate in general in a way that we haven't seen before. I think they are also training their sights on the industrial sector, that it's not just kind of the stereotypes that you would think of, you know, trophy office buildings and hotels in, you know, New York and San Francisco and places like that. I think they're seeing the potential as well for industrial properties. And so I'd say Asia is having a very strong impact on the marketplace right now.
Okay, and if I'm a foreign investor and I can afford any kind of property in any size level, and I was asking you about which sector you would recommend, would industrial be at the top of your list?
Yeah, I wholeheartedly agree with that. I think whereas, you know, I haven't soured on apartment. I think, you know, with the construction that we're seeing in the apartment sector, it's going to have a more challenging 4 to 5 years ahead than the previous 4 to 5 years. Although I think things will be relatively attractive. Retail and office tend to lag the recovery, so I think we're a little ways away before they're what I would consider to be overall a really favorable environment. Whereas I think industrial is kind of in the middle. It didn't rebound as quickly as apartment did, so it's not at those latter stages the way apartment is right now, and it's not lagging the way that retail and office are. And I think if you look at the outlook for fundamentals, I think if you look at the capital markets environment, the investor interest, it's almost like the perfect storm right now. And I do think, at least over the next couple of years, that industrial is poised to take the baton from apartment and kind of run for a little while as the most favored property type in commercial real estate.
And of course, in apartments, you're also having a good bit of new construction that is really ramped up. And I guess from what you were saying earlier, in industrial, you're just not seeing that much new supply yet, right?
No, I would say that's the big difference between the two. Whereas in apartments, I think the demand side of the ledger is just fine. We have a lot of young people leasing apartments, but not surprisingly, when vacancies are this low and rents are that high, everybody wants to build. We haven't really seen that with industrial just yet. So whereas industrial has had a pretty good run of things for the last few years, it hasn't served as the catalyst for just the deluge of construction, at least not the way that we're seeing in the apartment sector. So I would say that's probably the big differentiating factor. The fundamentals in both of those property types, apartment and industrial, are good, but we're just not seeing new development in industrial of the scale that we're seeing in an apartment right now.
Right. And I guess you tend to see a little bit less spec as well in industrial than you might in the other sectors, right? But you're starting to see some spec development in some of the U.S. markets for industrial, aren't you?
Yeah, slowly, but I agree with you. It's not a property type where we tend to see a ton of speculative development. I think the speculative money these days continues to be flooding into the apartment sector. I think we're seeing some spec in office and some spec in retail, but not all that much really in industrial yet. And so I think that's one of the things that probably, again, even though I do think construction is ramping up, is maybe keeping construction from getting over its skis the way that we might see that play out in the apartment sector.
Okay, so you expect cap rates in industrial properties to compress slightly moving forward?
I think so, because I think if you look at the forecast horizon, we expect the economy to be pretty good over the next few years. We expect fundamentals to continue to improve. I think it will be a conducive capital markets environment, even if interest rates start to nudge up, which is, that's a broader discussion for another time. But I think if you take all of those factors into account, I think it presents a very favorable market environment for, maybe not the kind of massive cap rate compression that we've seen in the few years since the market started to recover. But I think, kind of flat to slightly downward over the next few years is a reasonable expectation to have.
Okay. And where do you see some opportunities for investors in the industrial sector?
I do think, as we just talked about, that there isn't a lot of speculative development. So I think anybody who wants to be out on the risk-return spectrum, I think there are opportunities there, especially in some of those bigger boxes that are being developed. Now, as we discussed earlier, there might be a time issue there. At what point do these sectors start to fall out of favor or become obsolete if the market decides to move to even larger centers, 2 million square feet or more? But I think in the short to medium term, for anybody who has a fairly good risk tolerance, I think we can't build those centers fast enough. The demand is outstripping the supply right now. And so I think with that being the case, anybody who really has the capital and wants to get aggressive, and even for bigger industrial centers, they're not all that expensive to build vis-a-vis the other property types. There's some pretty interesting opportunities there. I would also say kind of at the lower end, smaller stuff, 200,000 square feet or more, where we didn't have the supply-demand imbalance the way that we've seen for the larger stuff over the last few years. That market is starting to get its legs underneath it a little bit. So I think anybody who wants to be a little bit ahead of the curve and take a flyer on a smaller center, I'd say you sharpen your pencil and be careful about the market and sub-market that you're in. But that said, I think there are really good opportunities there for somebody who wants to get a little bit aggressive.
Oh, well said. I believe that with the increase in the economy and businesses start to expand, there's a lot of opportunities in all size industrial properties. Well, Ryan, thanks for joining us today. We appreciate your time.
My pleasure. I always enjoy it, Michael.
All right. Thanks for your insight. And stay tuned. We're going to talk to a broker on the left coast, the West Coast, see what's happening in that market on the ground level. So stay tuned. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. Ryan? The Commercial Real Estate Show is brought to you by Bull Realty Commercial Advisors, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive and powerful suite of commercial real estate tools at an incredibly low price. Visit realnex.com. That's REALNEX. Xceligent, the resource professionals use for commercial real estate information. Visit xceligent.com. That's XCELIGENT. Commercial Search, the source to market and source available properties for sale or lease. Visit commercialsearch.com. For more information on these great companies or for additional videos, podcasts, or articles, visit CREshow.com.